Can everybody hear me at the moment? Awesome. Just had to make sure since we've been having a little bit of issues here and there. But today we'll be taking it easy and I'll be bringing you guys through my understanding of price action. First off, I want to start with today was contract rollover day. And more specifically, it was actually yesterday, the official expiry date of the futures contract, NQH, ESH, right? If you're trading micros, MNQH, all of those. But the expiry date doesn't necessarily mean that it is all of a sudden the one with the highest open interest. So I use this special tool called bar chart, which I believe I have in links. I do not have in links, so I'll add that under Forex Factory in my tools in the list after this call. But basically you can go on bar chart and this is what it will open, barchart.com. Okay, go right here to select a commodity, and if you go down to indices, and let's just say I do the NASDAQ, you can actually view open interest on specific contracts. So I concentrate on this number right here and see at this specific moment, NQH has a higher open interest. So during the full rollover week, which is the full week right now, contract expiry week, every morning I'm looking specifically at which one has the highest open interest, which one has basically the highest open positions, open money inside that contract. So if I was to be looking for a trade right now, I'd be looking at NQH. So I'd be trading and executing on NQH. So it's a lot of back and forth for a week. Like today, for example, it was NQM. When I opened my charts this morning, NQM had higher open interest, and it will probably be the same for tomorrow. But it's usually a lot of back and forth. So every morning, just add that to your routine when it is contract rollover week. Just wanted to go quickly over that. And now we can have a look at our beautiful charts right here. So as you can tell, I have a lot of makeup on it, just making sure you guys can see, right? Should I delete all those drawings? Give me a little message in chat, just making sure you guys can see my screen at the moment. All right, awesome. So I'll be bringing you guys through just my regular analysis of me technically I'm starting to trade at 8:30, but I'm not taking a trade before, well, today I did not take a trade before 9:30. So I'm not going to be looking at it like that. I'll be concentrating on what I had previously marked out. So first of all, looking at our higher time frame charts, should I go back to a daily real quick? I didn't have enough information on my daily. I had this range drawn out, so this low that there was SMT with ES, and this high right here marks out my range. I just moved it a little to the right. So I was looking for a retracement into the discount of this range, and more specifically, as I said in my weekly analysis, perfect scenario was we retrace and take out those equal lows. So that's why just a second ago I had this drawing right here. Retracement to these equal lows and continuation to the upside, but I also had in mind that, hey, it could go down and then continue lower, target this low resistance liquidity. If we look at ES on a daily chart, you'll see right here, all of this, that's not a daily chart, all of this is low resistance liquidity. Once we're going to be going down there, we're going to be going really aggressive. Don't worry, Nak, I'll get to that if I'm trading tomorrow or not. I'm going to just take it step by step to continue this review. So those were the two possible outcomes I was looking at for my weekly analysis, and since we don't trade before CPI, today was the first trading day. And if I go down a few time frames, more specifically the 4 hour to gain more context, what do I see that happened today? More specifically, 6 to 10 a.m. candle right here. That includes CPI news. So I can see that we have rated sell side and reacted to the upside. Actually, that's the wrong day. So that's not included CPI day, but Monday rated to sell side, retraced to a discount, and no, it did not have the perfect setup that I wished I could have had to taking out these equal lows. We still took out sell side, reacted to the upside right here, market structure shift, so I could expect further bullish prices. But more specifically, what I had in mind was, hey, so if we're reacting off of here, it means we have a bullish objective. What is my low-hanging fruit bullish objective? Well, this fair value gap right here. Why? Because it is a premium inefficiency. Actually, our first premium inefficiency, to be more specific. So I had in mind that, hey, it could retrace here and then go back here. And then I had the same plan of, oh, well, we can continue to the upside or we can expand lower depending on what I see on my lower time frames. But as you guys can tell, we had a beautiful Judy swing with the news and then continued higher. And actually just with the afternoon 4-hour candle, which is 2 to 6, we closed above, invalidating this fair value gap, which is now an inverted fair value gap. So our price action today was bullish. If I now go to my lower time frames and concentrate on the open, right here, by the way, bottom left, I have 5 and 15. I just switch in between both at all times. And right here, I have my 1 minute, which is my execution chart. If I concentrate on that, I can see that this is CPI right here, what I would call a data low. That got taken with a 9:30 Judah swing, a New York Open Judah swing. Yes, exactly. I was getting to that, Emil. But at that specific level, if I go look at my SMT chart, where here you can see I have ES, here you can't see because there's a little watermark, but I'll actually move that. This is NQ right here, ES, YM for confirmation. If I have all of those in the 4-hour, and you actually look, wait, was it 4-hour SMT? That's not what I was looking at. There was at the bottom, if you look, oh, actually, no, there isn't. There is at the bottom here. Actually, that's not what I was looking at. I believe I was looking at a 1-hour chart. So I have the low right here. I got taken out at both times. 15-minute. You might be right. I'm a bit lost since I just deleted all my drawings. Thank you very much, Aonia, I guess. Aonia. I don't want to mispronounce your name, but thank you very much. Yeah, so I got confused. I'm trying to remove all my drawings. But yes, there was beautiful 15-minute SMT between NQ and ES, which is always the strongest. And I like to use the Dow Jones as a confirmation. So, okay, I have SMT here. Do I have another SMT present on the Dow Jones? Yes, confirms my SMT even further. So that provided SMT. I'm not going to lie to you guys. No matter which asset is strongest, I'm always concentrating on trading NQ, at least until I have numbers big enough that I need a more liquid asset, which would be, you get easier fills on the S&P. So that might be something for the future. But for now, I'm concentrating on NQ because no matter if it's the weaker or stronger asset, I'm always going to be getting a better risk to reward. So for me personally, that was an opportunity right there. You have SMT fully confirmed. It makes sense with everything you have. And if you actually look at ES, I believe we had quarters of the wick at that low. So looking at a 15, if I can have a 15 on right here, and I draw my wick quarters. So I utilize the wick to draw quarters. This is, how could I say that? So this is a mohawk. It is a margin of error. So the low is 5176.25. That is not the right low. It is 117.75. And right here, I have 0.18.25. That is 2 ticks. That is a mohawk, a margin of error. If I look at my 1 minute chart right here, you can see how we reacted to that specific level after testing consequent encroachment, moving past, and then reacting higher. Right here, I have my market structure shift. I have my bullish breaker being formed. Sadly, on NQ as well as ES, we did not have an opportunity, whether it be on this inverted fair value gap right here. Let's say I don't draw it, but I just line it up. Never revisited that. And you didn't have a retracement into a fair value gap up to here, which was too far away from the breaker to consider that a unicorn entry. So if you're a student of mine, you did not trade on that specific time. But right after, still within macro, you have this right here. and more specifically, you have SMT right here. So if I go back to my SMT chart and I look at these two highs, which right now are not swing highs, but if I go down a time frame, for example, right here, you can tell that ES took out this high while NASDAQ didn't. So multiple SMT at multiple different places. If you look at YM, it actually did a lower high here as well. I was bullish, so I did not care about SMT that would tell me the high was put up. That only tells me, hey, we're due for a retracement. And what did we do? We engineered liquidity through the form of a breaker, right? Taking out this low into what? That is new week opening gap from the 10th of March, so this week. So this week's new week opening gap. See the respect of this level? I don't need it to be perfect. It's a new week opening gap. It's a constant liquidity void. It is constantly going to use and be attracted to and expand away from that specific area. So I don't need it to be precise. I need to see a certain setup happen at that specific time and at that specific level. So right here, as you can tell, took out this low, and then we took out this high, creating a breaker. But if I utilize this SMT, then I can say that, hey, well, NASDAQ didn't take out this high, but I can treat it as it did. Why? Because ES did, and I'm bullish, and I'm expecting higher prices, and power of 3 makes sense. If we look at 10 a.m. power of 3, right here, that is our 10 a.m., our 4-hour candle open. What did we do? Open low. We're expanded towards a high, retesting that specific opening price, which is right here. We're retesting that opening price before pushing higher. So it made sense with power of 3. We had SMT at the lows. We also had 1 minute SMT right here. If I go back to my SMT chart, a lot of SMT today, which means a lot of confirmations, right? It was a truly beautiful price action type of day. I'll just say I go to 10 a.m. right here. You can see right here, higher low compared to this one. And if I look on NASDAQ, lower low. Same thing for Dow Jones, higher low right here. So with this also SMT confirmation, I could treat this as a breaker block right here and take this fair value gap as an entry, as a unicorn entry, even though on NASDAQ this isn't yet to be a breaker block, sorry, not a fair value gap. I can treat it as such because of the SMT. I understand that correlated assets are related, are correlated, so I can treat them as they are the same pair. I can take an entry on ES while being on NASDAQ. It's going to come out to the same for me. Right here, by the way, I drew the fair value gap like this because there's a small little volume imbalance right there. So I include those in my fair value gaps and use them as one PD array when that happens. So you had a little trade right here. If I put it like this, that is quite a wide stop. So that's not a trade I would have taken first hand, especially as our low hanging fruit objective would be liquidity here. And more specifically, I had a 1 hour chart right here. I was targeting premium liquidity. So I was targeting this buy side liquidity into premium of our range. I'm going to delete that, have a little cleaner template on. So into the premium of my range. That is what I was targeting, this at the time fair value gap. So that is a pretty simple external to internal framework. We took out external liquidity from this range. So we're going to retrace into our latest expansion range, which is right here. This is premium. This is our premium inefficiency. 4 hour external to internal liquidity was the framework. Wait for a setup to form in macro. You need your element of time, but you did not reach all the way there with that trade. Let me just mark it out correctly on this chart. Oh, well, you did actually. That's awesome. So that is my 1 hour swing high. I also, let's just say I mark out my 4 hour. I'm not going to go in depth about exit, but here is my 4 hour fair value gap. Because I don't consider 1 hour, I'm going to say the question because I'm recording this as well. Why not target the 1 hour bearish fair value gap? Let me just go through it. So this one right here. Because I don't use the 1 hour as a higher time frame. I don't consider it a higher time frame. It is an intra-week intermediate time frame, and I don't look to be trading 1 hour movements, because I don't look to be trading a trade that is of a 1 hour candle. I'm looking to catch at least a 4 hour expansion. I don't trade 20 handle moves, 50 handle moves. I try and catch the 150s, the 200 handle moves. On trending days like today, 300 handle moves, with a range of 317 handles today precisely. And you could have called the absolute low of day and taken profits along the way pretty close to actual high of day, which if we had more time, we would have reached this new week opening gap, which was my final objective. Just to go back to this is not a trade I would have taken, because this is my low-hanging fruit objective, which doesn't offer at least 2R. It is a trade you could have taken towards the 1 hour external, the 1 hour liquidity into the 4 hour fair value gap. But if you don't take this trade because it doesn't allow for your minimum framework, which it would not for me, you just had a better opportunity right here with this. Did this inverse beforehand? This did not inverse, but I would have basically taken the turtle soup right here. Why? Because we trade under old lows right here. We have this fair value gap, retracement into the fair value gap, SMT. If I look on ES at that specific time, you can see how we respected this inefficiency to the T. All right, we barely traded under consequent encroachment with one candle, which could be considered just a volatility spike. So it did offer you a better entry right after it that you could have taken right here, or even for me, I would not have even waited for this to invert. I would have just taken it as soon as I see the SMT and the turtle soup. But let's just say we make it easy. Even with the same stop loss, you still get what, like 5 handles larger? Oh, a little more than that, more like 12 handles. So that offers you for way better risk to reward, which 1.95, I round that up. That is fair enough, because I also need a 40 handle minimum framework. So this is all good as a low hanging fruit objective right here, which is AM highs, just current high of day right here. I'm expecting us to expand through it. I was expecting a trading day, which we did, and then the 4 hour fair value gap as a second objective. And that's where you could have just had a runner break even, and you would not have gotten stopped out with this specific entry compared to this one. So this really looks like hindsight, just picking the best entry. But personally, I was in directly here as a turtle soup. So I don't have to pick the best entry. This is a beautiful breaker block continuation. I scaled in positions in here, and you could have used PD array quarters to scale out of your position into the 4 hour fair value gap. I actually have a class about this, but see the respective consequent encroachment here. This is where one contract off inside. I see that we pushed through 0.25. We reached the midpoint of this fair value gap, consequent encroachment, another contract off. Then it's just trolling. I have stop loss break even. You could even trail your stop higher. Then you see, oh, we're closing above 0.5, another take profit at 0.75, and we have not reached 1 at all during that time. Retraced during lunch, and then continued for the PM session. I'm not going to analyze the PM session in depth, because there is no point in looking for another trade on a trending day in the PM session. So of course you had opportunities. You could have used the lunch macro, the end of lunch macro, to time in a beautiful breaker. There's probably an inverted fair value gap right here, retested right there into the bullish breaker. So you have a unicorn entry lined up with this. So I draw that right. Just want to give you guys a visual aid of what I'm seeing. Right here, 3 PD array. So 1, 2, 3 PD array stop loss, fair value gap, fair value gap, fair value gap. If these 3 PD arrays get invalidated, I no longer want to be in a trade in that direction, and then current high of day. So you still had opportunities, but the truth of it is that would not be an opportunity, just an opportunity to add more money if you actually executed correctly and scaled in correctly. I guess managed your trade correctly. So I don't want to go in depth into what happened the afternoon, but it's pretty clear. We had a very clear line. We had a small low resistance liquidity, and then more high resistance, low resistance liquidity run, and then just some high resistance move to the upside that didn't even equate for half of this move, I believe. This was 280 handles, and this move offered 166. So yeah, half of it. Let's see, if you were in at this point, you took profits here, had a runner break even that allowed for a maximum profit of 36 handles more than your final take profit on the other position. So this is not the type of stuff that would interest me. Something that could be possible is this right here. I believe we had SMT at those 1130 highs. Let me go double check what I'm saying. Should I move this aside? 1130 highs right here. You can tell actually if I draw them out right here with this high. So you had SMT present between NASDAQ and ES right here. So this is where you could have looked for. Let's just look at NASDAQ. NASDAQ did the higher. You had bearish breaker right here. Let's just draw it out to give you guys a little more visual aid. Bearish breaker. When did it become a breaker? When we traded through it. What fair value gap was your unicorn entry? Right here. So fair value gap. Just so it's a little easier to see, I'm actually going to make them purple like my inverted fair value gaps right here. So you had ample opportunity even in the PM session. This one gave you a little bit of heat. This is fair value gap. I have the order block right here and the liquidity above this high. So this would be my stop loss. And what would you target at this point? Well, you'd be looking for a retracement. So you'd be looking at premium and discount of the full AM session range. So I like to mark it out as OTE. You'd be looking for a retracement to a discount, which it barely failed to do. So as for myself, I would not have even had time to take profit at this trade, because my first objective would have been the liquidity below this low, which is the first discount in efficiency. So you can be trading counter trend. So for example, on a trending day like this, which means a day that goes in the full direction the whole time and is actually also a daily profile, right? We have big expansion in the morning, we have lunch retracement and continuation in the afternoon. Talking about New York session specifically. Well, why would I want to be grabbing this counter trend when I know it's going to keep going up afterwards and I expect it to go up and I have a higher objective that was met, but I'm also anticipating that, hey, it could actually inverse this. This move down could just be a retracement up to where? Well, I have a 1 hour chart right here. It's pretty clear up to where, right? I would like to see it retrace to a discount, but it does not have to. Why? Because I can also use the bodies of my candles for ranges. And if I look at my 1 hour bodies, that is far past a discount retracement. So concentrate on pro trend trade ideas, and you'll notice that your win rate will go extremely up. And as traders, at least as my personal opinion, I value consistency way higher than results. Someone can win one trade out of 10 and have 30 R. In my eyes, he's not profitable because his largest losing streak is probably 40 or 50 trades. And then I have the other guy who has a 1 to 1.5 or a 1 to 2 risk to reward that wins 80% of his trades. And that guy's profitable because his worst losing streak is probably 6 or 7 trades. And then he's down 6 or 7 R and he can make that back in 2 or 3 trades or maybe 1 or 2 weeks, compared to the other guy who has to go out a drawdown, get a few wins, and then at the end doesn't even end up making money on his year because he still has to catch up his losing streak. I hope you guys agree with that because that's a big one for me. But as you can see, pretty simple opportunity. Sadly, did not give a setup earlier. I'm going to look on ES really quickly to see if it provided an opportunity. It did. if you anticipate the breaker block, which I don't recommend except for advanced students. So I would not recommend for you guys. These were my wick quarters. Let's just say I take that off and I actually draw this breaker block. If you anticipated the creation of this breaker, so let's imagine you're actually this candle, you can actually see the retest of this inverted fair value gap. From all my trades, these specifically of anticipating breaker blocks only happen under 10%. So under 1 out of 10 trades. So it's probably somewhere around to like 1 point something for 20, which is not a statistic that is big enough to even consider. But you could have anticipated it and entered right here, having the SMT that was present right here as a confirmation that, hey, the low has indeed been put in. And then you had a decent R trade, right? You had 4.2 R up to current daily high, and then you could have continued higher. And if we look, for example, on a 4-hour chart on ES, you didn't have a clear inefficiency here up to this order block. So this would have been your low-hanging fruit objective. And if I look in a 1 hour, I would not even consider this fair value gap as the order block range king in this specific price action, I guess. So you also would have had a small continuation towards the order block. And what I like to do when I use higher time frame objective is, once again, use premium and discount arrays, quarters, premium and discount array quarters. As you can see right here, it would have gotten me wrong actually and would not have worked very well. We had a failure to get to consequent encroachment after breaking our first quarter of this order block. So that's not the most interesting utilization of this. We had a pretty simple day that gave you plenty of opportunities if you were looking, right? I just saw another one on ES right here. You have a bullish breaker. Why? Because we took out this low right here and then expanded past this swing high, which is our initial breaker range right here, breaker block. And then what is that? Retracement, unicorn, retracement into fair value gap, unicorn. I have this fair value gap, order block, liquidity. I would have allowed it to retrace to this fair value gap right here. Anyways, I was gonna say this is bigger than my minimum stop loss on ES, which is 3 handles, but you could have traded ES here with a very large 5.75 stop and actually had more than 2R just for current high of day, and then a continuation towards the bearish 4-hour order block. So as I said, that might not be what you have seen today, but that is how I interpreted price. And it was actually a super clean day that gave you plenty of opportunities. And as I said, I'm not going to concentrate on the afternoon. As you can see, ES just went sideways on trending days. Unless you're in the morning, there's nothing that's going to be high probability in the afternoon. So you either have a runner from the morning or no trade, in my book. And you also had a day that had plenty of SMT, which is a big one to study, guys. So if you guys have nothing to do tonight, just go study SMT. It's an underrated concept that unlocks a new vision for the markets, because every time it reverses, there's SMT. Every time it retraces, there's SMT. That is definitely something I would say you guys should go look in your charts for.